Hi there, Katie.
Hi, it's actually
Dominique, sorry. Yeah, I was like, wait, where's Dominique?
Okay, give me 1 second.
see. I think Dom is on as well. We have a couple people who have joined as well.
Wonderful. I know Kelly's joining.
Awesome. I just sent her the link. Welcome to those who are on the call. Dom, are you on as well?
I'm here as you.
Great. Okay, I'm gonna be the host. Great. So we'll get going when Kelly joins.
Perfect.
I think we have somebody who is chatting.
Thank you, Katie, and hello, everyone. I'm Dom. So while we're waiting for our last panelist to join, if you all could just let us know where you're from in the chat, we would love to see where everyone's from.
All right. Hello.
Hi, how are you?
Made it. Great. How are you?
Perfect, good. So I was just introducing myself to everyone. Again, I am Dom from Always, and I am from Oakland, California, right in my living room. And thank you so much to Harlem Capital for joining us with this. And then I will pass it over to Gabby to introduce yourself.
Fantastic. And so excited to be here and so excited to do this with Always and with Kelly today. So I'm Gabby Cazeau. I'm originally from Maryland and an undergrad studied chemical engineering. And my journey to Harlem Capital first started by working in the food industry. I was designing and creating new products and doing everything from early stage consumer research to going to factories across the country to figure out how to make products at scale. I really loved that work, but was starting to get excited about seeing what that looked like from an entrepreneurial lens, given, had been at a lot of contract manufacturing facilities and getting to see entrepreneurs building and creating their own products there. I was also excited to see what it looked like to build and create from the business side of things and figuring out how to marry those two worlds together of building the physical products in the engineering lens and figuring out the business to support that. And so that's what took me on my journey to business school. And in that process, was looking for a startup to join before school and had the opportunity to join Harlem Capital Partners in the internship program. And that changed the trajectory of what I was excited about working on. I originally thought it'd be great to see startups from that early stage from, folks that are investing in them, and fell in love with that work of being able to support founders at the earliest stages, whether it's with their strategy or how they're, running their business, being able to support that vision for the future. And, our mission is to invest in women and minority founders, and being at the intersection of those identities. This is incredibly value aligned work for me and is something that's incredibly meaningful. So I've been with the team in the senior associate role since September, and focus on investing work as I'm on the investment team, but also on some of our ecosystem efforts and trying to figure out ways that we can continue to elevate and use our platform to connect folks in the ecosystem and really bring support some of the great diverse folks that are out there. So whether that's through our partnerships with accelerator programs, getting to meet folks through different technical organizations, just finding ways where we can meet them where they are, see if we can collaborate down the line, but continue to elevate the conversation about diversity in the space. And then I'll share a little bit about Harlem Capital itself. Very briefly, we started in 2016 originally as an angel syndicate where the partners were investing their own money in early businesses in New York that continued to evolve and started investing in startups as they saw, a lot of great deal flow coming from women and minority founders and startups in the space. But then as they started realizing the lack of capital and access to capital going to women and minority founders, decided to really focus their investing there. So had an angel fund, invested in 6 companies, and then spent 18 months building and launching the institutional fund, which is super exciting. We closed that in November. It's a $40 million fund, and we've already invested in 13 companies, which is super exciting for us. We're industry agnostic and geographically agnostic, so look for founders all over the country across a variety of industries. We don't invest in biotech, crypto, blockchain, things that are just outside of our wheelhouse or pretty technical, as we want to make sure that the founders we invest in, we can really support them in their journey with all of the tools and expertise that we do have. And so, whether that looks like great support from a marketing lens, supporting them as they're analyzing their businesses from a financial standpoint, we really just do what we can there to support, companies at that seed and Series A stage.
Perfect. Kelly?
Awesome. Yeah, thanks, Gabby. Really excited to be here today. I'm Kelly Goldstein. I'm also a senior associate at Harlem Capital Partners. I'm originally from Connecticut and went to college on the East Coast. I'm currently wrapping up my MBA at the University of Michigan. And during that time, was focused really on pivoting into venture capital and spent 2 years working with Harlem Capital Partners, also as an intern last year. And prior to that, I was working in brand marketing and development, both throughout the US and in Singapore with Unilever and Edelman. And during that time, I supported a lot of programs that were focused on investing in women entrepreneurs and became really passionate about that space, and also spent time consulting with startups in a range of industries, from beauty and fashion to fitness, women's health, and media. And one area was definitely working with social entrepreneurs, and those experiences together really made me want to move into the investing sphere, particularly with a VC firm that was, mission driven. And of course, Harlem Capital hits on all of those needs and passions of mine. So really excited to be here today and to connect with the All Race community.
Perfect. Well, again, thank you. So let's just jump right into the topics. So Kelly, while I have you, fundraising, what should you be fundraising, or when should you be fundraising?
Sorry. So, fundraising is really dependent on the status of your business and where you guys are in your business cycle. If you are thinking about fundraising right now, some of the things to think about, first of all, if you have 24 months or more of runway, focus on your business right now. And we're suggesting 24 to 30 months, because the last recession we saw around 2008, it lasted about 18 months. And so, this situation could be the same, it could be worse. So try to give yourself some buffer during that time. And also, if you're planning on fundraising, know that, don't stop, but know that it's going to be a longer process. So I think deals have been moving really quickly leading up to this crisis. And now you can anticipate maybe a 6-month time frame for fundraising. So it's going to be a slog. And I think venture funding, it's going to be a little bit slower. In a comparable period, in 2008, again, there was about a 50% drop off in the overall venture funding. And recent studies in the New York ecosystem at least suggest that firms are actively investing, but they're a little bit more risk averse. They're slowing down their investments in 2020 and being a lot more thoughtful. I would just say, keep going after it. Anytime fundraising is going to be an overwhelming and nerve-wracking process. And of course, even more so during these uncertain times. And so I think it's important to know everyone's feeling the weight of this time and experiencing decreased valuations and likely hearing no more frequently than they might have expected. So, it's not really that comforting, but hopefully knowing that you're not alone is helpful. And, make sure you have a support system of people who you can talk to during this time, and take the necessary steps to take care of yourself, even if that's like 30 minutes in the morning, spending a little bit more time on your skincare routine or whatever that is. I think that's really important.
Right. Gabby, curious to know, what strategies should founders use in approaching investors right now?
Yeah, so some of that will depend on where you are in your fundraising cycle. So thinking about it in 2 buckets of folks who are not fundraising now or are planning on fundraising in a couple of months, and then after that, folks who are currently fundraising. If you're in the bucket of not fundraising or looking to fundraise in a couple of months, I think now is a really great time to start building some of those informal relationships with investors, getting to spend time knowing, say, the 10 to 12 investors who, whose background you like, who invest in your sector, who invest in similar companies at your stage, just so you can get to know them and, build that rapport so that when you do go back to fundraise, you're able to, hit the ground running. Ways of thinking about engaging with them could look like seeking advice on your pitch deck, or just getting insight and learning about the firm and their process, so that once you do get to that fundraising step, you're able to really expedite and know what to expect from their lens. For those who are currently fundraising, just like Kelly mentioned, it can be an intimidating process. If you are new to it, we definitely encourage, don't be shy, is some of the best advice that we can give. You're here for a reason. You have your vision and your product, and you've been working so hard. And, there are investors who do want to hear from you and are excited to learn about your company. One piece of advice there is that, if folks who have raised VC funding, or you have investors in your network, you can use them to try to get warm introductions with other investors that you're interested in talking to, or even just to get feedback so that you're ready to talk to your target investors. Another great method is just sending cold emails or LinkedIn messages. At Harlem Capital, we get a ton, and we actually really welcome that kind of engagement. A couple of our portfolio companies right now actually came in through LinkedIn or through just sending us an email, and we really believe that there's some incredible opportunities and founders that are outside of our network. And so, I think increasingly you're seeing more and more firms really approaching and embracing that. What I will say is because of that, investors are getting a ton of messages every day. So if you do send one, just be really clear and concise to stand out so that, investors can get that really great first impression about how you go through your fundraising process. In that message, include, say, a quick summary of your business, what problem and solution you're solving, how you're doing it, your vision, if you have revenue, what that looks like, this year and what you're projecting later on, as well as any key, performance indicators that show that you're getting really great traction and, you've got a strong growth trajectory. And then also just quickly give, the top line info about your raise. So how much you're raising, other investors that are in the round, or how much money is left, that you're looking to raise, as well as your evaluation. And then lastly, so actually in our website, we've got a sample, guide of what to do, as you're building your pitch deck. If you go to harlem.capital/pitch deck, you'll see a guide that our team put together just so that you can see what investors are thinking about and looking for when going through your deck. I guess the other piece is, as Kelly mentioned, investors in some cases are definitely slowing down right now. And I'd say, don't write off folks who don't invest in you today. It could be for a number of reasons that don't have anything to do with your particular business. It could be that they're just, more focused on their portfolio companies, trying to save more capital there, or just want to extend, the life cycle of the fund and how quickly they're pacing their investments. So just continue to, stay engaged with them and maintain those relationships because you can always come back later on and revisit those conversations too.
Okay, perfect. And do you think you should consider a bridge or seed extension strategy right now?
Yeah, I can jump in that one. I think similar to the fundraising strategy I mentioned earlier, if you don't have 24 months of runway, it might be worth considering a bridge or a seed extension to make sure that you're in a good place moving forward and that you can sustain your business. But make sure that the funding, like any other fundraise, is really tied to a specific goal or benchmark for your business. Mm-hmm. And keep in mind that there are other ways you can consider to extending your runway. So it could be optimizing to bring in more revenue. One of our portfolio companies is doing a really great job of pivoting during this time. If you haven't heard of AmpFlow, definitely check it out. They began as a B2B company that brought tampons to your bathrooms, and because they're FDA approved, they're able now to pivot and create PPE for healthcare workers right now. And so they're getting a lot of really big contracts that they may not have gotten otherwise, who could be potential customers in the future. And they're actually sort of changing their business strategy and model now, given the time. So I think, being agile and flexible and thinking of creative ways to bring in more revenue is really important right now. Definitely, work hard to retain your current customers, try to get paid up front if you're a B2B business in particular, mm-hmm. And engage in new acquisition strategies. So another one of our portfolio companies is in the B2B SaaS space, and they didn't offer, free trials before, but they are now, particularly as companies might not be willing to pay for a new product at this point in time. So they're offering free trials, and then hopefully, they're going to improve their pipeline through that and secure people from getting them in the door and using the product. Another thing you might want to do to help extend your runway would be to cut some expenses. So, maybe you're reducing or eliminating rent. There are a lot of rent clauses like force majeure that would enable you to do that. So definitely take a look at your contracts, talk to your landlords. You also might want to reevaluate your marketing and your ad spend, which we can get into more detail later, but just make sure, you're getting the most bang for your buck on your marketing strategy, and you should be reevaluating that right now anyway, to make mm-hmm. sure that you're, anticipating how customers are going to behave during this time and communicating with them in an appropriate manner. You also might want to eliminate some SaaS subscriptions that you have, like licenses or seats that you don't need. And you could also think about reducing the scope of some retainer services that you had. Yeah. As far as, reevaluating headcount, I would say that's probably one of the last things you want to do. Be as transparent as you can with your employees during this time. I think everybody is really anxious and uncertain about what's going to happen. So the more open you can be with your employees, the better. Yeah. And definitely connect with your employment counsel before making any big decisions, but definitely Some things to think about could be like maybe pausing hiring, talk to your employees. I forget which company it was, but it was a great example of the CEO cut his own salary, talked to his employees, and everybody sort of agreed together that they were going to accept a reduced salary. So the more transparent you can be and the more engaged you can keep your employees during this time, the better. You might be able to reduce 401k matching or forego bonuses. Maybe trying furloughing instead of totally laying people off. Just try to find ways to kind of avoid layoffs. But if you have to do that, just be mindful that your employees are humans, be kind, find ways to support them, make introductions to other businesses, let your investors know they might be able to help find roles for your employees that you might have to let go. And then finally, to extend your runway, maybe think of other sources of funding. So there are a lot of government grants and loans right now that you could look into. Venture debt financing is always an option, but I would say maybe consider this only if you're cash flow positive. So you don't want to end up using the funds that you receive to pay down the interest. So just be really careful if you decide to go that path.
Thank you.
Sure.
Now I want to kind of switch it over to pitching. Gabby, I know you touched on this a little bit earlier, but wondering if you can go into more detail on how to prepare for pitching.
Yeah, definitely. Let's see. I think getting maybe like some tactical, focusing, more granularly. I think one of the first things and biggest things folks need to do is, really have your story down. Investors are investing in you and your vision, and how you really share and articulate that story is going to be, critically important to getting through, any form of the diligence process. I think there's a number of things that you should make sure you have on hand before you start approaching investors. I think the first thing, going along with that story is your pitch deck. So, that should express your story, your vision, your plan for the business. But also, I think a lot of investors want to know key insights that led to you starting the business and your belief in the market. You'll understand that problem deeper and better than investors will at the start. And so being able to really get them through, that problem and to the key insight, from your customers or potential customers is going to be really critical at that earliest stage. And then if you have tested your idea, have beta testers or have early customers or some, type of traction, sharing any anecdotes or verbatims or, things from your customer research to really give that confidence is going to be really exciting for investors to see. Also then once you're pushing, getting ready to approach investors, you really got to, think about the package you're going to be presenting. In addition to your deck, investors are going to want to see your data room, which will have, your financial model, historical or future projections, what your customer pipeline will look like if you have existing customers, and then, what you expect that pipeline to look like, and perhaps even the stages those customers might be at, if they're, you're definitely going to close them, or if they're more later on in the process, as well as, a list of your core performance indicators, like I mentioned earlier. So anything to show, forward-looking traction and growth and trajectory, whether that's about your average order value increasing or customer lifetime value increasing, or let's say you've got really low churn, those are the types of things folks are going to be looking for. Other pieces, I think investors, especially now that we can't really meet in person and are constantly, having to chat over video, I think it's important to, start thinking about people who can advocate for you in the business, as investors are going to want to be doing some references. So if you did an accelerator program, thinking about, the person who led that. If there's some customers that can really vouch and speak highly about the business, that'll be, very valuable as well. And then, some of the other things we mentioned that should be in your deck or your initial email already, but, how much you're raising, your valuation. Sometimes we don't see founders setting what they, think their valuation should be. And we actually think it's okay if founders set that number at first. Overall, it'll be a negotiation if you get to that stage of, the diligence process, but at least it gives you a starting point and gives investors a sense for what you're thinking about the business there.
Okay. And while we're there, what trends are you seeing? Are there any industries that are growing or shrinking?
Yeah, a ton. It's something I've been thinking a lot about, actually. So on the industry side, I think where we're seeing a lot of growth right now, and eventually some strong opportunities later on, thinking about our world now being remote first, any tools, that folks are building to help support that process and that journey for companies are going to be incredibly valuable, whether those are related to, say, productivity or collaboration, software that allows people to do better work together. We think as well, the go back to office time will, be slower. You're starting to see companies even being more aggressive than state governments. And so, being able to help companies navigate that process and transition as well is going to be really powerful. I think on the health and wellness side, this is a major health crisis, but we're starting to see, some decreased regulation and I think friction that was in the system, because of some of the laws that were in place that are now being relaxed. So if you think about expanding of telehealth, and now that's more accepted in Medicaid across a variety of states. Some of those reduced frictions are going to stay post COVID. I think one, to help increase access to care, but also thinking about how healthcare and how we engage with healthcare is going to have to change if we can't have clinics in the same spaces as we have people that are being treated for different types of conditions and stuff. So I think that'll be a really interesting area. Tied to that, I think, is mental health. That's something we've known and been seeing and tracking for a while. And that growth will continue and is just amplified by this crisis. So whether that's through self-care apps, like in a company in our portfolio called Shine, or anything related to meditation or wellness, or being able to access care, virtually, is going to continue to grow. Similarly, I think consumer-facing apps that focus on curated digital communities, where we're trying to replicate some of our in-person experiences and putting them more online outside of, the major platforms of like Twitter or Facebook or Instagram, being able to, continue to engage on that intimate level. And then another one is cybersecurity. I think as we get more distributed and have more folks working outside of, their core office hubs, networks are becoming more vulnerable. And we're even seeing increased phishing attacks across different organizations. I know I've gotten a couple, and I'm sure some other folks here have gotten some. So businesses are going to have to start thinking about what that security looks like. So on the other side, definitely going to be some challenges. I think consumer products, in certain space categories are definitely challenged. I know investments in this space are starting to drop already. There's a CB Insights report recently that showed that. If you think about just cuts in consumer spending, as people are, there's just a lot of anxiety and uncertainty around the job market. That's going to be, a challenge for those businesses, as well as any supply chains that might be impacted. But I do think that there's some categories of consumer that are growing, where consumers are still, purchasing, and that's a really great opportunity for brands to really stand out and gain market share. Those who didn't have a clear proposition or sort of in the middle, I think will struggle a little bit as well. And then quickly, I think another couple things would be, the travel or hospitality space, real estate, and the experience economy. I think that will bounce back eventually, but once things are safe enough for folks to really do that.
Thank you. And then Kelly, while we're on this topic, did you want to talk about communication and leadership within companies right now?
Yeah, absolutely. I think communication, as I noted earlier, is key and extremely important all the time, but especially during this time. I think both internal and external communications are paramount. And I would start, of course, with, internal, make sure that your own house is in order and your employees know, what their stance is, what's going to happen to your employees, what you're planning to do as a business, how the business is going to be sustained, and, be as transparent, as authentic and human as you possibly can be. At Harlem Capital, we recently brought in an exec from Edelman to share their learnings from a special trust barometer study that they did during COVID-19, and they found some really cool takeaways I think might be useful. So I'll share a few of them. The first is, as I noted, start internal, get your house in order before you start communicating externally. 63% of employees said they want to hear from their employers on a daily basis. So definitely, ramp up that internal communication strategy if you don't have it in place yet. And with that in mind, revisit your overall marketing strategy right now to reflect the current environment. I think some brands maybe haven't moved quickly enough on this front and have not been thoughtful about the way they're approaching their marketing and advertising. And as a result, a third of consumers have actually stopped using products or services because the brand didn't respond appropriately to the pandemic. So definitely keep that in mind. Don't disappear though, don't shy away during this time. 90% of consumers said that businesses must do everything they can to be engaged right now, and also communicate that they're protecting the well-being of their employees and suppliers, which is really interesting. And then also, I think it's good to note that 62% of consumers believe that brands actually play a critical role during this time, and that they'll be helpful in addressing the challenges consumers are facing during the pandemic. So definitely use your brand position to find a way to make a positive impact and be engaged during this time, of course, thoughtfully. Don't act alone. Find ways to collaborate with other businesses and particularly governments or relief organizations. 90% of consumers said that brands should do this, and they expect to see that. And then also just communicate with emotion and compassion and facts. 85% of consumers thought that brands should be an educator during this time. So just providing instructional information relevant to the current environment, and how your business may play into that. And also, you can use social media during this time to facilitate a sense of community and offer support. 84% of consumers wanted to see that. And consumers also expect brands to keep them updated on what's happening at the company. So, how are your operations changing? How are you supporting your employees? How are you going to support your customers? And so just be present during this time. And also keep in mind that if you're going to have a lot of spokespeople out there, the most trusted authorities right now are doctors and health authorities. So if you're going to say anything related to the medical or health space, you might want to nod to the experts there. And if you don't have a doctor or health expert speaking, then at least, cite the information and make sure you have all the right facts.
Thank you.
Yeah.
Okay, so for the last 30 minutes, I'll go into the questions that we got. So, Gabby, has your threshold for risk changed during this global pandemic?
Yeah, not on mute. I think so. I'd say overall, yes, but it's helpful, I think, to break down when we're talking about risk, like what type of risk, because I think it varies depending on the type of risk. So I think we like to talk about like market risk, business risk, and then operational risk. I think market risk, I think that threshold is definitely probably the highest. It really, as I mentioned before about different trends or industries that are being impacted, I think that's probably the biggest challenge right now, and figuring out what the overall outlook looks like for a particular category. So like I mentioned, things in the travel, consumer experience economy, looking at companies in those spaces right now is pretty tough as they're heavily impacted. The slow, how quickly we come back will really dictate how those businesses are able to survive through this short and midterm shock to the system. But if you look at other categories like beauty, it's been doing pretty well. But on an individual company level, it's still a pretty crowded market. And so really have to think about how that particular company is going to be able to navigate with their brand, their unique focus, how they're building and leveraging community, as Kelly just mentioned. So with market risk, I think it depends on the individual category, but then also the macro trends that are coming. And then if we're thinking about like the risk to the actual business, again, that'll, depend on what type. So if it was a business that naturally would have high burn, so a lot of, spend on their expenses, or had unfavorable unit economics that would work at high scale, but not, where they are yet at the early startup stage, or might have high working capital needs and need to be able to, finance the business through that period. Some of those are going to be tough right now, and are definitely things that we're on the lookout for as we're going through diligence with companies that are in our pipeline. Especially if it's not something the business can work through quickly as they're in this stage, and then really have that really flip when they grow. So that's, definitely still, I'd say, yellow area. And then if we're thinking about like operational risk, I feel like that's also part of the for the course at early stage investing. So we're at the seed and Series A stage. As we look at companies, there will always be some form of operational risk, whether it's related to go-to-market execution or strategy. But I think our belief is really we're backing the team, we're backing their vision and strategy, and really banking on them and their unique insights and hustle and grit to really figure those challenges out and grow the business. There will be pivots and changes, to their strategy and how they go about the business, and that's expected at this stage. But I think it's going to be a higher level of precision is going to be required as companies make those pivots and have the belief in what those pivots will do as the business grows. So I do think the bar is a little higher, and also then valuations are going to reflect the risk that investors are willing to take. So you'd expect valuations to drop a little bit and investors to take more ownership to compensate for those risks.
Thank you. Kelly, how many new deals does Harlem Capital have, the capital to be able to fund?
Yeah, so we're actively investing right now, as Gabby mentioned. I think all investors are a little bit more cautious in terms of the risks we're taking, but we're
Yeah.
out there, we're sourcing deals, so send them our way. And so we're committed to investing right now. And we're also committed to supporting our portfolio company founders during this time and being as engaged with them as we can be. We'll likely invest in 5 to 7 more deals this year and planning for 10 next year. So we are open for business.
Thank you. And then touching on that same subject, what do you think about angels? Do you think they're scared to invest right now?
Yeah, I think it's going to depend on the type of angel you're approaching, right? There are some individual angels out there who might, be more risk averse right now, given the dwindling public market performance, because they're just a single investor. But I think if you're looking at angel syndicates or angel groups that are more formalized, they probably already have funds set aside to deploy and will be, ready to go. We actually just talked to a founder who was able to round out a deal really quickly with all angels. So it's definitely possible. And, we've seen angels filling in those gaps. So I think they're definitely still active. You just need to find the right ones.
Yeah. And how do you think that founders should keep investors interested and excited?
Yeah, I can take that one. So thinking about venture, from a game theory perspective, which I find kind of interesting, you can categorize venture capital as a repeated game. So, the more interactions that you have, you're just going to, continue to compound as you go along, the raising process. And so I think the best things folks can do is just continue to share their progress. So if your KPIs are continuing to skyrocket, if you're getting more traction, continue to share some of those metrics with investors who might be on your weekly, your quarterly updates, or, send informal notes about, hey, we just landed this big customer. Just wanted to share that update. New things that you've built, sharing why that's impactful to the business, just continuing to show that you're continuing to make progress. And I think investors really appreciate seeing what that looks like over time. And then, as we mentioned earlier, building relationships. So even if investors aren't investing in you right now, the more you're able to connect and the stronger you can make that relationship, the easier you can help make those conversations when you do come back to raise, or when, you're at the stage that they're looking for. Another piece is that if you have reached out to investors in the past and they have, passed on investing, really take some of that feedback if you get it to heart. If they don't give it, you should ask, so that you can come back and say, hey, here are some of the things I worked on that were concerns before. This is where we are. Let's renew and restart that conversation now that I'm in a different place. So I do really think it's about continuing to keep people in the loop, staying top of mind. Investors are seeing a ton of deals. And so making sure that you can be in their top 5 that they're looking at any given period when you're at that ready, stage ready for investment, is really important.
And a question from the chat, do you think there are things that should not be shared with investors?
You can take that one, Kelly. Sorry.
Okay. Yeah. I always lean on the side of being as transparent as you can be. Typically, if you have secrets or anything in the business that isn't going well, that your gut reaction might be, I don't want to share this, I would say be as honest as you can be, because those types of things are always going to come out in the open. And I think in the long run, those types of secrets or things that you might be inclined to not share could come back to bite you. So I would lean towards the side of being as transparent as you possibly can be with your investors.
Thank you. And then another question from the chat. How has Harlem Capital adapted to not being able to physically meet with current portfolio companies and founders?
Yeah, I can take that one. So actually one of the great things is that our team is primarily remote first. That's sort of the nature started. So we have a lot of processes already that enable us to work remotely really well. Even in better times, we would only meet in the city, in the office when we had, in-person meetings. And so we're able to be pretty fluid there. It goes for in our portfolio, we have really strong lines of communication with them, whether we're texting or sending email or updates, ad hoc or for board meetings. So we're really able to continue supporting them and making helpful introductions or connecting them to industry experts, like Kelly mentioned with Edelman, from a marketing standpoint. So we're able to continue to be all full systems there. And then for folks in the pipeline or new investments, we're doing more video chats. We're still talking over the phone. What we're seeing more is that our diligence process is just taking a little longer because we want to better, really just get to know the founder a lot more. But overall, I mean, we're still using our same systems and processes. So we've been able, I think, to adapt really well and just continue to maintain the business going forward.
Perfect. And does Harlem Capital look at portfolio companies outside of the US as well?
Right now, we are not looking outside of the US. If you are operating within the US and outside of the US, of course, that's something we would look at, but we're not actively seeking investments outside of the country that aren't, headquartered here. But, hopefully in future funds we'll be going global. So, happy to start building relationships in that space, but not actively investing outside of the States right now.
Great. And can you tell us a little bit more about what Harlem Capital specifically is looking for in a startup? Is it traction?
Yeah, so it's a mix of the things that we've already mentioned, but actually if you go to our website, you can see our criteria there, but I can quickly run through a couple of the top things. So we do look for businesses that are post-product, ideally, post-revenue, looking for companies that are about 6,000 K in MRR and continuing to grow consistently month over month, so say 10% month over month. We, again, will look at businesses and talk with folks that are, pre-revenue, but that is one of the things we're definitely looking for. Otherwise, in the founder, we're looking for someone who has shown a lot of grit and hustle as they're building the business and making things work with limited resources at the early stage. And that gives us an indication of what you'll be able to do, once you do get that capital infusion, if we were able to invest. In the company itself, looking for, say favorable unit economics or economics that will continue to grow as the business scales. Looking for a company that's working in a $1 billion plus market to really make it work for the venture capital ecosystem, where there's a really strong opportunity. The founder's got a really clear view and vision for what the company will do and how it will serve an unmet need in a space. So those are some of the top things we're looking for. And then again, focused on women and minority founders. So would love, to continue investing folks that meet those criteria as well.
Great. Let me see how many more questions we have. Are pre-seed companies too early for Harlem Capital?
I would say no. There have been some exceptions where we've, invested in the pre-seed stage. I would say it's a very rare opportunity to be a pre-seed company and have us invest, but we would definitely consider, depending on, all the criteria Gabby mentioned and the opportunity we see. I think in terms of, markets we're looking at right now, we want to make sure that, this is a company that we would consider investing in pre-crisis and also one that will be resilient throughout this time. So I think, pre-seed is going to be challenging, but we're definitely, open to looking at them. And there are certain criteria that might get us over the line. Most of the pre-seed companies we've gotten very far along in diligence or have actually invested in have, multi-time founders at the helm. So I think that experience and trust in the team is even more important for a pre-seed stage company, for us at least.
Okay. Question from Lynn. What do you think will change in physical retail wellness spaces in terms of investment post-COVID? So she was in the middle of preparing to fundraise before the crisis happened, but now having second thoughts.
Yeah, so repeat that again, the physical retail wellness space?
Yeah.
Yeah, I think, after the crisis, there'll definitely be a comeback. I do think, we'll see more investments in this physical space, maybe 24 months out from now. So I think it's really tough to be in a physical space right now. I do imagine that consumer behavior is going to be really different when we get out of this crisis. People are just going to be more aware of, the way viruses can spread and all of that. So I think, there's really so much we can see into the future in terms of how things will change. But I would say think about ways you can bring your business maybe into a virtual space, and then, re-strategize for how the physical launch could happen at some point in the future, because I think unfortunately right now it's going to be a really tough tough market, but wellness is a great market to be in. So I think you have some positives there, and just really rethinking about what that strategy could look like in a virtual world, until people are ready to get back out.
Yeah, thank you. And I'd just like to get some closing thoughts from the both of you, and then I'll give mine as well. Do you have any last words of advice for founders of color?
Last word of advice, I'd say, one, I think you have a lot of champions in the industry. I think over the last couple of years, we've definitely seen more folks focused on investing in women and minority founders, really excited about investing in them. And so even if it is still, scary to reach out to investors, please still do, reach out to Harlem Capital. Our emails are on our website. And, we really want to support and uplift folks across the ecosystem. Investors can't invest in every company that we see, unfortunately. I think at Harlem Capital, we invest in, say, 1% of all the companies we get to see. So even still, know that, we're still your champions. We're still here to support you, and, really hope and want your businesses to be resilient through this period and afterwards. But yeah, I think that would be my closing word.
Thank you. Kelly?
Yeah, I would definitely echo what Gabby said. And, as I mentioned earlier, find your support network and don't be afraid to reach out and use this time to build relationships too. Even as Gabby said, if investors aren't, investing in your business right now, they could still be, potentially great mentors. And I know everybody on the Harlem team is eager to support the ecosystem. And so we're here for you. And I would also want to leave you with some, positive thoughts. I think while the declining VC activity and declining valuations is really unsettling, it's important to know that there are great companies that emerge from recessions. I think there are probably like 50 tech unicorns that were founded between 2007 and 2009. And over half of the current Fortune 500 companies were founded during a bear market or a recession. So there is hope, and, stay positive, and also, keep your eyes on the future. I think it's worth noting too that right after the crisis in 2008, from 2010 to 2014, VC funding was, increasing year over year by 25%. So there's hope, there's light at the end of this tunnel, and stay tough and rely on your network and your community.
Yeah. And just to kind of piggyback off that, I would just say to just keep going. It's already tough enough to fundraise without a pandemic. And I know it's hard right now. It's going to probably get harder, but keep going and realize you can ask all the questions right now. Now is a good time to say, if you don't understand any of the terms, if you don't understand anything that's happening in this world right now, it's a good time to kind of lean on others and ask all those burning questions that you have. And then also I want to leave you with a quote from Mandela, who's the founder of Founder Gym. And she says to insert yourself into ecosystems and keep showing up. So basically, if you're not going to show up, then you won't be there to make the change. You won't be there to make the difference. And then you won't be able to help anyone else. So remember to keep showing up. Thank you all so much for joining this. Thank you to Gabby. Thank you to Kelly. And be sure to go to the Harlem Capital website. And that is all that I have.
Thanks, everybody.
Thank you, Dom. Thanks, everyone.
Thanks, Dom. Thanks, Katie.
Thank you.
Bye.
Bye.